Good morning and welcome to OAG's latest webinar. It's been a month since the last one and we've got lots of new information for you. Please do ask questions as we go along. The format's the same as usual and you'll get a copy of the webinar afterwards if you want to have a look at it again. Today, we're going to be looking at the hot topic of sustainability, at least for part of the webinar. It's one of the subjects that's been gaining ground, and rightly so, but it seems to have taken on a new urgency in the past few months. OAG has been looking at the subject for several years to see what they can contribute to help partners across the industry make better decisions. And today we're going to be able to show you where that effort has got to. But it wouldn't be an OAG webinar without the usual look at the latest trends in flying and getting you up to speed on where the industry is now, all with the help of some OAG data and some pretty slides and charts. As usual, we'll be looking for trends in the data so we can better understand what's coming down the line. And we're also going to revisit some of the volatility data that we showed you last month. Today, we've got, aside from myself, we've got a couple of people from the OAG team. We've got Matt Colling. Matt's EVP of Content and is responsible for OAG's data partnerships. Hi, Matt. Good to have you with us again.
Morning, Becca.
Good morning. And as usual, we've got John Grant, OAG's Senior Analyst and regular spokesperson for OAG. How are you doing, John?
Oh, better for speaking to you, Becca, better for speaking
That's what you always say. So, John, we've had IATA at the IATA AGM, we've had World Routes, we've had a few big in-person meetings happen in the last few weeks. Have you been off anywhere? Have you been, is that a sign of the health of the industry as well?
No, I haven't been to any of the events. When freedom arrived, I decided to go to the beach, so much more sensible and pragmatic. But well, yes, sure the world is reopening. We've had two very big events, lots of stories from IATA, not just about recovery, but about sustainability, of course, and carbon emissions and all of those good, jolly subjects. So yeah, we're beginning to see a bit of momentum come back, which I think is good, and obviously lots to talk about this month.
Yeah, that's good. That's good. And I'm sure you deserved your week on the beach. You've been very busy talking a lot for 18 months now. So anyway, let's move on. And we're going to start here with just the sort of usual roundup state of recovery where we are. The chart here is showing capacity versus the same month in 2019. So whether the data point is a 2021 or a 2021 data point, it's comparing to 2019, which for the moment feels like the most useful way of showing the data. There's some really positive trends in capacity here, aren't there, John? As you just alluded to, really, lots of lines moving up towards the right.
Absolutely, unless you're in the Southwest Pacific and you're in New Zealand, in which case you've probably got another 5 years of prison sentence the way things are going there at the moment, and Australia, where you know, the sort of lockdowns on the domestic market in July and August saw a dramatic reduction, and the bubbles were bursting everywhere. But generally, in terms of capacity, it's beginning to look a lot more positive. There are, you know, very steady trends in most regions of the world, and we're getting to about 30% below 2019 levels at this moment in time. So we're heading in the right direction, but this is, and I keep stressing this is about capacity, and, you know, demand is still lagging behind. We are seeing markets where we get that pent-up demand, and when they open, the sudden spurt of demand and traffic, but then a sort of settling back to normal travel patterns. And of course, corporate demand is still lagging. So we've got lots to be optimistic about, but we're by no means out of the woods, and we need to be very cautious about how things evolve in the next 7 or 8 months, I think.
Yeah, very interesting, but really good to start seeing some really positive signs of recovery here. Well, what are we looking at here with China here? We've seen a bit of a dip here, and we know China's a very large proportion of the global market at the moment. So at a global level, whatever happens in China affects the global numbers. But we've seen a little bit of a dip here. Do we know what this is about?
I do. It's the Willy Wonka Golden Week, when the holiday season in September and there was a rush of increased capacity put into the market by Chinese airlines, and in the last couple of weeks it's settled back to what have been the more normal levels that we've seen. So it was just the impact of a bit of a spike around Golden Week and then a settling back. It is fascinating though. China at the moment, less than 1% of all capacity operated in China is to international destinations, and that continues to be the biggest challenge for the global aviation industry, is international capacity in and out of China, particularly for those countries in the Southeast and Northeast Asia regions that traditionally have literally hundreds of thousands of seats a week operating to those parts of the world.
And we've spoken before, we've seen these two very significant dips, first of February and then in August, in capacity in China, where because they're still pursuing this zero case approach, they pull capacity very fast and then they bring it back in when there's outbreaks. Are we seeing any signs of China changing its approach?
Not at the moment, and I don't think we will, certainly until after the Winter Olympics in Beijing. And indeed, overnight, there have been stories of wider outbreaks of COVID-19 in cities in China. So I wouldn't be surprised if we didn't see another reduction in capacity in the next couple of weeks if there is another outbreak occurring. The Chinese are acting very quickly, very sharply. They're controlling airline capacity very tightly, and because of all of those factors, they are capable of delivering sudden dips like these two we saw in February, March and August. So don't be surprised if we see something there.
Okay. It's also helpful to, you've sort of alluded to it already, to look at the domestic versus international and separate them out, because we're seeing still very different trends. Obviously, from the beginning of this pandemic, domestic traffic was coming back faster. And as you said before, this is capacity, not traffic data. So we've pulled out global domestic capacity here versus international. So the trend is positive even with the international, isn't it? Since about June, we've started to see the international capacity pick up, really ever since Europe sort of opened up a bit more, hasn't it?
Yeah, the battle of the European beach towels, which recommenced in June, that is a watershed moment. Many markets reopening in Europe, freedom of travel, all the quarantine restrictions in most countries eased, except of course the United Kingdom at that point. So that accounts for that relatively large growth that we've seen through to August. Since then, we've seen changes in travel restrictions. The UK has abandoned the traffic lights. Someone nicked them overnight. Probably using them for a disco.
You were never a fan of the traffic lights, were you?
No, it's just impractical. And of course, as we head forward into the winter season from the 8th of November, the whole of Europe is essentially now allowed to revisit the United States. So in terms of capacity, we're in an ironic situation where we're going to see more capacity going into North America and the United States than we've seen through the summer season. Still not at traditional 2019 type levels, but yeah, there's more to come. And of course, that then leaves maybe 2.5 potentially large areas of the globe still where international travel is restricted. We touched upon China and obviously Southwest Pacific, although Australia is hopeful and confident of being able to reopen from middle of December for some international visitors. So yeah, the trend is very much up, Becca, but still got to put this in context. International capacity is now at just 48% of 2019 levels. So it's only half of where we were 2 years ago. So, airlines make their money on international flights. Domestic flights are not profitable for many carriers.
That being said, what is it that's holding back domestic from actually surpassing the 2019 levels? We're still sitting at 14% below 2019. Is there a reason for that? Because it feels like, you know, most, certainly in the UK here, most people are moving around. Is it the loss of corporate travel? Is it just that there's some people still fearful about traveling, or is it the international connectivity that forms part of the domestic market?
I think it's primarily now the international connectivity. If you look at any transatlantic flight into a hub airport, a Chicago, a Dallas, Houston, Newark, 40% of passengers could be connecting onwards to a domestic destination in the United States. So I think that's part of it. There is also a lot of traffic that crosses the US-Canada border, which isn't possible at the moment. And I think you're absolutely right. The bureaucracy, the pieces of paper that you need to travel internationally at the moment, you know, it's easier to shuffle a deck of cards than it is to shuffle the pieces of paper you have and need to show at various points on a journey. And I think people are concerned by that. They're worried that they're going to get turned away at the gate, and you know, no one's clear what happens then. Can you rebook? Do you lose your money? What happens? So I think it's a number of factors, but certainly connectivity is probably the largest one at the moment.
Yeah. Okay, great. We've taken that same look at domestic versus international, done that, replicated that for a number of countries. And because this morning webinar, at least for those of us in Europe, it's in the morning, but I know it's the afternoon for those of you further east of us. We're aimed at Europe and Asia Pacific, listeners in the Middle East, Europe, Asia Pacific, and so on. So we've picked out some countries here. We have got the US and we've got China, but also the UK, India, South Korea, and Japan. Really interesting. These three countries along the bottom, China, South Korea, Japan, virtually no international. That's sort of very clear pattern. But elsewhere, India and the UK and the US, certainly international picking up. So quite different strategies, isn't it? I think this makes it quite clear, doesn't it, that different approaches being pursued.
It's stark, isn't it? You know, these three bottom slides just tell the whole story, and it's the frustration that I think travelers, tourists, and everyone in those markets are experiencing at the moment. Just so frustrating. And some of these countries are still some way from being ready to receive international travelers. You know, Japan is struggling to get the right processes and protocols in place for accepting international travelers before the first quarter of next year. China we've spoken about, but if you look at the UK and you look at the US, then clearly things are getting better. I think we'll see perhaps India's international capacity coming back a little bit more in the next few weeks as well. So it is we've always said from the beginning of this event, no two markets are at the same situation in their COVID pandemic and their aviation crisis. And this series of charts, I think, just demonstrates that so clearly.
Yeah. Really interesting, this very high volume of domestic capacity in or proportion, you know, 20% versus 2019 in South Korea.
Well, it is, Becca, in the context of there isn't a large number of domestic airports in South Korea, and before the pandemic, Seoul to Jeju Island was, I think, probably one of the top 5 in domestic routes, largest routes in the world.
It was always in one of the busiest routes.
And with the, you know, and now there's even more capacity being put in there. And of course, that means a lot of this is domestic tourism. And you know, that's great. It's kept the economy going, it's kept the airlines going. But what happens beyond that? You know, is that sustainable? Will some of that capacity flip into the international market, to tourism destinations in Japan, Southeast Asia? Probably it will do.
Right. Okay. Let's move on, and this is a look at the last 12 weeks. Again, we're looking at capacity by region around the world, with the most recent week of data, which is from this Monday, the 18th of October, on the right-hand side. And we're just showing the capacity versus the same week in 2019. So as John said earlier, we're now sitting at around 29% below where we were 2 years ago globally for this week. And we've seen, if we look back over the last 12 weeks, slow improvement really, 34, 31, 32, and then slowly coming down. But it's very slow progress, isn't it? I think the standout one here is Southwest Pacific, isn't it? Still sitting at 70% below last year, below 2019.
It is, and you know, that is obviously an issue, and it needs to be, and it will improve over the coming months with Australia finally accepting zero COVID strategies don't work, and of course they need the balmy army to go down and play cricket this winter to help their bar bill receipts, if nothing else. Yeah, I think this plays to a slide we're going to show in a minute as well, Becca, about schedule volatility. You know, in the last couple of weeks, we've certainly seen a more consistent profile to airline behavior. There's a bit more consistency in what we're seeing. The volatility is beginning to be reduced. But this is probably going to be the situation we face for the next 5 or 6 months, I think. You know, we will see more capacity coming back on the North Atlantic. We will see a bit more coming back in Southwest Pacific. But there are very few airlines who are keen to add or will indeed add any capacity over the winter program. It just, you know, it's just too high risk, and there are so many other factors now at play. The price of oil is rising rapidly. The cost of operating, therefore, is increasing. You know, there's a new Delta variant apparently that could potentially be a risk, although it seems very low at the moment. Further outbreaks as we get to the winter season, and you know, people staying indoors, etc. Yeah, it's a nervy time for the airline industry.
I was going to ask you about the fuel price, because it's almost double, I think, from a year ago, isn't it? And it's now hitting at $100 a barrel. So does that in itself threaten any sort of recovery for the airlines? Is that's going to make them more nervous about adding capacity? If they weren't nervous already, then the fuel price is going to be a big issue, isn't it?
Yeah, well, it is. You know, many airlines traditionally hedge their price, and some will be going into the winter with more exposure to the spot price than is normal. They will not have hedged as much of their fuel requirement as is normal, just because of the doubt and the cash flow.
They got their fingers burnt a bit last year, didn't they, with hedging?
Absolutely. Well, you know, Cathay Pacific, I think, for many years got their fingers burnt, but you know, yes, they did, and it's so uncertain, and you know, when you're buying forward, you have to have confidence and certainty about the volumes you require and the price. So it's going to be a challenge for some of those carriers, and not just that. You know, we have London Heathrow as just one airport yesterday receiving approval for an increase in their airline fees and charges of approximately 50% in the next couple of years. And that will be a direct pass through to the customer, the passenger, and that will impact demand on the margins. You know, the market does have a degree of elasticity, but for some, it will challenge and make them think twice. We've got the whole discussion about APD and the environmental taxation around the world. So there's lots of factors that airlines have got to weigh up, and I think most of those make them think that they should be very cautious about the winter.
So that sounds to me like we are just going to continue to look at a smaller industry for some time to come.
Yeah, I think so. You know, we've lost a couple of airlines. There are new airlines that are about to start services, and even during the pandemic, we had carriers launching, particularly in the US. So I think we will see a smaller industry probably for the next 2 or 3 years. I think about 20% of the world's airline fleet is still grounded. And of course, you know, overlay on top of all of that, Becca, one of the reasons airlines are being cautious is it's proving very difficult to get cabin crew and flight deck staff to return back into operations. You know, we've seen airlines in the United States who've had their fingers burnt where they've put schedules out there and ultimately run out of operating hours on their cabin staff and flight decks because people have found different jobs. And that's going to be the same in all markets as the industry recovers, not just Europe.
Well, it's really, the tough times continue, don't they? You were talking about the winter. Let's have a look at the winter in a little bit more detail. This slide actually just takes us to the end of the year, to December. And we've been tracking each time we've done these webinars for some time now, looking at how the schedule looked and how it's been changed week by week by week. So this just picks out 5 points in time. The big thick yellow line is this week, what we're seeing in the schedule. The vertical line here is where we are today, and this is where we are going forward. And then each of these other lines are a previous point in time, what the capacity was in the schedule. This really goes to show, doesn't it, John, that from the start of the winter season, the IATA winter season at the end of October, there's not really been much change, has there? There's this sort of resolution about the schedule volatility, more of a consensus about where the capacity needs to be from the end of October. Obviously, we're seeing a little bit of a move upwards towards the end of the year, but we're not seeing that sort of change in capacity. You know, earlier back in August here, we're seeing quite large chunks of capacity coming out of the schedule. So this is at least is a positive sign, isn't it?
Absolutely, and I think, you know, kudos to every airline network planner that they are able to finally take a bit of a rest and not be looking just 4 or 5 weeks out. There is a bit more stability in the market, and because of that stability, we can see this sort of capacity pattern through to the end of the year. It's good in terms of, you know, we got more confidence, but it's still, as we said, 30% below where we were 2 years ago. And I think if I look at, because I have, you know, had a peek forward into the first quarter of next year in terms of capacity, most airlines are carrying this trend and this pattern through to the end of the winter program. So it's unlikely we will see much more of an increase, I think, in the coming months. Airlines are going to be playing the game of revenue management now, you know, and that's good news for the whole industry. If they can squeeze another 5 or 6 euros, dollars, or pounds per passenger, I think that's going to be their objective rather than stimulating demand through the winter period.
Okay, it sounds like we're going to be able to retire this way of looking at the industry in this slide. It's it's quite a sign of progress, I guess.
Yeah, it
so
is.
We've taken a look a bit further forward. So this goes through the whole of the winter season, so right through to towards the end of March, and just shows the grey line here is what actually. Well, the black line is the capacity that we saw in 2019-2020 winter season. The grey line was what the capacity looked like at the start of that season. So that's sort of using that snapshot feature that's available in OAG Analyzer. So clearly at the beginning of the season, the expectation was that capacity would be flat pretty much all the way through. So compared to that, what we're seeing now, this is our snapshot now, looking ahead to the rest of the winter, we're seeing this steady increase in capacity right through to March. Is that realistic, John? Is that's airlines just expecting gradually more international opening, capacity coming back, more people traveling? That's just sensible, or is that just a bit too optimistic? Can we tell yet?
Yeah, Becca, I think it's too optimistic. It's almost as optimistic as a 5-day test in Australia lasting 5 days. It's just, we're still seeing every week around 6 million seats being taken out on a forward rolling 3-month basis. So, you know, if I was to look at next week's data, then it's likely 6 million seats will have been removed through to the end of December or the middle of January. And I continue to think that will be the pattern. So it will shave down a bit. But, you know, that 6 million may only become 4 million, or it may only become 3 million a week as we get a bit more confidence and a bit more stability in the market, and we avoid any more outbreaks or issues of concern around the globe. And we can't say for sure that that will be the case. But if we do that, then compared to where we were in August, when 14 or 16 million seats a week were being taken out by airlines for the next 3-month period, if that's settling back down to 3 or 4 million being taken out, then we've come a long way in rebuilding confidence and understanding, and being able to give a more accurate view of capacity going forward for 2022 and beyond.
Yeah, it has to be good for airlines, and as you say, the network planners will finally be breathing a sigh of relief. And it's been a pretty tough time, I think, for them. Anyone who thought they knew what the job of a network planner was has had to rethink it. So we wanted to look, before we move on to sustainability, to look at a couple of the other sort of current trends we're seeing in the industry. So one of those is we were talking just about the A380, and we're seeing some A380s come back into service. And having said in previous webinars, this is the end of the A380 virtually. Is this a surprise, John? I mean, obviously they're not operating at the level they were back in December 2019, when we saw 10,000 flights operated across the month. We're at a sort of third of that level, and obviously most of those are with Emirates, but a few other airlines also bringing their A380s back into service.
They are. It is a bit of a surprise, but in each of the cases of those 6 airlines who are now putting it back into service, there is a specific commercial reason that makes absolute sense. For BA, there are certain points on their network where, maybe because of bilateral constraints that only limit services to a number of frequencies per day or week, you want the biggest aircraft you possibly can have on the route. Emirates, of course, don't have very much choice. It is the largest part of their fleet. Korean Air, again, are using it for some of their large markets. Qatar Airways are using it to offset some of the reductions in A350 flying they have to do at the moment, whilst they've got some engineering issues and maintenance things that they need to resolve. And it's also a great negotiating stance for Qatar Airways, who love hitting airlines, aircraft operators when situations like this occur. And Singapore Airlines are still a relatively large user of the A380, and with the Australian market, the kangaroo market reopening and their virtual travel lanes, it's an aircraft that they can make use of. We're not going to see Air France bring it back, I don't think. We're not going to see Lufthansa bring it back. They don't need to. I think Qantas could well bring the aircraft back. I'm not sure Malaysia Airlines will. So it's becoming more and more of a niche aircraft, but it does fill a specific gap for some airlines.
And we've seen, I know I read from Ishka a week or two back, they're saying that there's more demand for the larger narrow body aircraft as well, particularly aircraft like the A321 Neo, that airlines are looking, that they're tending to upgauge their aircraft a bit. And there was some news about Delta and how much larger the aircraft are that they're flying now, both on short haul and long haul routes. Is that a trend we're going to continue to see, or is that just a temporary phenomenon?
It's been an interesting experiment, and we've seen many experiments in the last year, and the placement of some of that wide-bodied capacity on US domestic services, I think, has probably surprised the airlines with particularly the amount of premium traffic that they've generated. And there is no doubt that you can, and there is a market for premium leisure travel in the front end of aircraft, particularly when you take into account social distancing, revenge spending that travelers and tourists are making. So there's lots of there's lots of scope for more perhaps wide-body flying in the US domestic market on particular routes, maybe between hub airports. And that's how I think American and Delta were using the aircraft during the pandemic, just to keep the hours up and to keep their crews fresh. But I think generally it's going to be, summer 22 is going to be fascinating, because we're going to see not just JetBlue's Heathrow and Gatwick services, but we'll see Aer Lingus doing more A321 transatlantic flying. TAP Air Portugal are doing some transatlantic narrow-bodied operations this winter, and with the 737 MAX and the 321, it's going to be fascinating. United have announced 10 new European destinations next summer, some of which are on narrow-bodied equipment. So it's actually going to be an exciting summer next year, I think, with all of these new services. Not all of them will survive. Some will, wither on the vine over the first year or so. But it's good to be talking about expansion. It's good to be talking about growth, new destinations, rather than the networks contracting.
I've got a question as well, picking up on the sort of the idea of a premium leisure market. One of the things I saw that spokesperson from Delta said was that probably existed before, but those passengers couldn't get seats because the seats were being booked out by corporate agents. So is this a market that finally is, we're going to see some really interesting things. We're going to see product development based around that premium leisure customer. We talked for years about sort of silver surf, that the person who wants to sort of, travel around the world and is prepared to spend, an older person prepared to spend a bit more. But is this a really new recognition that there's a market there, and we haven't, as an industry, been serving it really?
Yeah, I mean, what we were really talking about, Becca, was your own personal travel aspirations, of course. But,
I'm not traveling anywhere at the moment. I wish I was.
That Silver Surf Brigade. But I think it's, before COVID-19, premium economy was rapidly becoming a very fashionable product. 34-inch seat pitch on a long-haul aircraft, a bit of recline in your seat, maybe a slightly upgraded meal. It was proven to be probably one of the most profitable cabins for many airlines, particularly in the long-haul sector. And during COVID-19, we've seen Emirates continue with the launch of their premium economy product. We've seen the US carriers come out with their products. And we've got British Airways finally trying to get rid of their A to breast business class seating. I mean, how on earth can you sell A to breast business class seating when everyone else is at 4 abreast? Has been mind-blowing. But they're now looking at putting business class suites on their 777s and on their new aircraft deliveries. So I think absolutely we're going to see this happening in business class cabin, but I think it will be at the expense of first class. I think we will see less and less airlines operating first class capacity in transatlantic and long haul international markets. We'll still have the US carriers pretending their 8 or 12 seats at the front of the aeroplane are first class, when in fact it's just a business class product at best. But I think we'll see more focus on business and premium economy at the expense of first class.
Interesting, very interesting. Okay, we need a couple more slides before we get to the sustainability slides. But this is an update of a slide we showed you last month. It looks very busy, and the lines are getting longer now. For those who haven't seen it before, on the lower axis here, the horizontal axis, we've got international capacity this week versus in 2019, so it's as a percentage. And there's two data points for each country. One is back on the 15th of July, and one is this week's data point. So we can see how international capacity has moved between then and now. And on the vertical axis, we've got the proportion of the population with at least one dose of vaccine. So we can see how countries are moving in terms of vaccination and in terms of international capacity. And what we're seeing is more polarization, really. On the whole, most of these countries here are moving towards the top right-hand corner. They're opening up international travel, they're vaccinating more of the population. But there's a handful of countries over here on the right who, despite the increase in vaccination, are just stuck with their international travel. We know that already. We saw some slides earlier about domestic versus international, but really stark when we see it like this, isn't it, John?
Yeah, you know, all I would say is stuck at the moment, and with the noises and with the ambitions that we're seeing in some of these countries, Thailand, Indonesia, Vietnam, even Malaysia, we should begin to see some of those very long straight lines begin to sort of turn to about 2 o'clock and begin to move forward, which I think, you know, it's just a matter of time in those particular cases. And I guess ideally you want to have a line that is, you know, sort of like those you see in the Netherlands and in Canada and Spain and Germany, where things are moving forward. So I think it's just a matter of time, Becca, before we see this. And if we look at this chart next month, I'd like to think that at least some of those have begun to move in the right direction, and we're beginning to see more international capacity.
Yeah, I'm sure we will, because there's definitely the right noises coming from those countries. Volatility. Last month we looked at volatility and showed just how much volatility there was in the market, but this month we're sort of in a way presenting a slightly more positive picture. What we've done here is, if I talk you through the Europe picture here to start with. On the right, we've got the week of the 20th of September, and there's two bars. The yellow one is the capacity that happened that week, and the grey bar is what was in the schedule 2 weeks prior to that. And then we've done the same for the previous 5 months, just taken 1 week of data and shown what the capacity actually was for that week and what it was 2 weeks before. And also we've got a point 2 years ago, so the same week as this week, but in 2019. So you can see in 2019, schedule volatility, almost none in each of these cases, very low change in that 2 weeks before flying, either in Europe, North America, or in Asia. And then in Europe, certainly back in April, we saw 12% change, and then it's got less as time's gone on. So definitely less schedule volatility in Europe. North America, they've just been ahead of the curve, haven't they, for all year really, so not so much schedule volatility in that 2 weeks beforehand. Asia, still quite a bit, but quite a bit of that is China. But it just sort of confirms what we're seeing, doesn't it, John, that the volatility in the schedule is finally beginning to reduce.
Yeah, I actually think this is probably the most optimistic slide in the whole deck, Becca, because it's showing that finally, you know, that stability is back and things are going in the right direction. And that's really, I think, good news. If you take Europe, for example, you know, in September, we're talking about a volatility of about 0.5 percentage point, and back in April, it was nearly 12%. So that's a dramatic improvement, and a dramatic improvement also on a larger number of seats. So, you know, that's another positive dimension there. And even in Asia, you know, things are improving. That -27 in August was all about China and the Chinese domestic market. And I guess I know that, you know, we should be using the US as our benchmark. You can see what sort of stability we've had in that market throughout the last 5 months. And indeed, this week, if you look at the top 4 US carriers' capacity week on week, it's unchanged. It is literally maybe just a couple of hundred seats more here and there. And we're talking on, you know, airlines that are operating 3 million, 2 million seats a week. So if we can get back to the type of stability we've been seeing in North America, in both Europe and ultimately in Asia. And we can do that as quickly as possible. That's going to be a much better position for everyone.
That's great. Really, really good to end this part of the webinar with some good news. Let's move on to look at sustainability, and definitely want to bring Matt in at this point, who's been working with some of the OAG data in this area. I should have given you an opportunity, Matt, to say anything about the rest of the industry earlier, but feel free to comment if you've got comments there. This last month, we saw IATA AGM pass a resolution committing members to net zero carbon emissions by 2050. How much of a challenge is that going to be, Matt?
Hi, everyone. Yeah, it's going to be a colossal challenge, and I think you know, it's good to see that the industry is in line with Paris now. And you know, we've had a question actually in the comments talking about kind of where we were pre-pandemic in sustainability terms, and conversations around flight shaming and those sorts of things were very much the buzzwords. We're not hearing that so much now. That's not particularly the driver, but I think during the last 18 months, you know, many airlines obviously have been very focused on their capacity and managing their airlines from an operational point of view and trying to survive. But we are seeing plenty of evidence that they've also been kind of calmly and quietly working in the background on sustainability to come out of the pandemic somewhat stronger, or with a stronger plan for the sustainability side of things. The challenge is going to be that they are not entirely kind of in control of their own destiny with regards to things like the availability of sustainable aviation fuel, new technology with regards to aircraft design and manufacture. And so some of those things, they are heavily dependent on other organisations to work with them, and governments as well, I should mention.
So IATA's in their publicity, and we borrowed their charts here, so thank you very much, IATA, is suggesting that 65% of the contribution needed to get to net zero will come from sustainable aviation fuel. But that feels like a big ask at this point in time, doesn't it?
Yeah, it's an absolutely huge ask, and I think currently there are 7 feedstocks of sustainable aviation fuel up and running and delivering fuel to airports around the world. And you know, in order for us to hit these targets, I believe it was something like we need another 21 feedstocks per annum over the next 21 years, or something absolutely outrageous. Huge capacity growth in sustainable aviation fuel needed. I think the attraction, obviously, for that particular solution being kind of the airlines don't have to invest in changing their aircraft and engines. You know, the sustainable aviation fuel can be used with their existing equipment. So that reduces that kind of shift to new technology is a much smoother path. So it's a very attractive solution, but we're putting a lot of emphasis on that 65%, as you say. And there's a challenge around SAF with regards to sort of the demand and supply side of things. So will the airlines be able to communicate to the industry, or the passengers, sorry, the benefit, and then be able to generate the funds? Will the passengers pay those supplements to fly sustainable aviation fuel? And similarly, if the passengers won't, will governments enable subsidies? Because at the moment it's a considerably more expensive fuel than traditional.
It's really difficult, isn't it? The question we had earlier that you referred to from Valerie also went on to say, you know, are we going to see, you know, she was asking about passengers and flight shaming and what role passenger perceptions play in this, or is demand going to be driven by low-cost carriers and their fares? And I know there was a Skyscanner piece of work that came out in the last week or two that interviewed many passengers around the world, and low prices of air travel is still what drives demand, aren't they? So the realization that, you know, fuel prices as they are high now, and if sustainable aviation fuel is higher still, you know, how achievable is this, and what does it do to demand? It's very challenging.
Absolutely, and I think what we're seeing with those airlines that are trying to adopt sustainable aviation fuel strategies are are targeting corporate buyers. They're not targeting passengers buying leisure travel. So encouraging organisations who've set their own carbon emissions targets for sort of 2050 or equivalent, approaching them and trying to encourage those corporates to invest in SAF as part of their ESG reporting strategy. So, very much going that route rather than promoting individual tickets. Of course, as we'll come on to, there are also initiatives that have happened recently that we've seen around the sale of individual tickets and trying to make emissions a more overt and apparent data point.
Yeah, let's have a look at that. So we've got we'll work through the points a bit higher up on the slide, but Google now, if you go in and look for flights in Google, and I've picked one here that's Dubai Bombay, you can see that for each flight option is this a percentage less emissions than the average flight for that route? Is that how it's been expressed? Right. And that's based on the aircraft type.
So yeah, we've been working with Google on this with regards to their calculation of emissions, and they're using our schedule and status data to make these calculations. So when you run a search now, as you can see, you'll get back emissions, and the percentage, as you say, is versus the average for that route. And the calculation is done using a combination of the flight distance or the scheduled flight time, the aircraft type, as well as sort of looking at whether or not the sorry, I've lost my train of thought, but it's also kind of we've been working with them and thinking about whether or not we can look at engine type, and we can get more specific and more granular, look at how those aircraft are fitted with. But then, as I say, with the status data, looking at the actual flight time, looking at taxi times and those sorts of things. Right. So it's an interesting area that I think we can get more granular, and we can provide a more accurate emissions data point. But it's great to see it out in the market, and Google making this data available to passengers so that they can make these choices. But to your point earlier, and to the question we had, will people look at the piece we have circled here in yellow, or will they look at the three numbers to the right? Yeah. And I think, if we're optimistic, they may look at the two in tandem, but if we're realistic, it's probably at the moment still driven by the right-hand side, as I say, for passengers on leisure travel.
This is a really positive step, isn't it? I know we did a piece of work with OAG a couple of years ago about sustainability, and one of the things that was pointed out in that was that you needed to provide passengers with information as well to make better choices. There's obviously a lot that the industry needs to do, but the traveller needs to be involved as well. And so OAG working with Google to provide this sort of information at the point that people are looking at flights has to be a positive step forward, doesn't it?
Absolutely. Raising awareness is one of the biggest parts of the sustainability agenda, and I think, giving passengers that information, allowing them to make choices. There's also lots of conversations being had outside aviation to compare emissions, where there are multimodal choices, of making people aware that the emissions from trains and or boats ships might be preferable. So it's great that we're seeing kind of more information being made available.
But these calculations are quite complicated, aren't they? We've listed a few of the things that contribute to carbon emissions. So there's obviously the aircraft type, and obviously if it's a larger aircraft, it's going to have more emissions than a smaller one. The number of flights that's operated, that's at a whole airline level. Congestion, as I think you said earlier, the time spent on the ground, taxiing, delays in the air, and then I guess the fuel type as well. All of these things are quite complicated, aren't they? So just putting it into a little number that says minus 17% is it doesn't show the amount of work going into trying to get an accurate view.
Absolutely, and there's many additional data points that, as I say, we can start looking at. We're investigating whether or not the load factor of the aircraft is something that we can bring in, both passengers and cargo. There's lots more that can be added, but I think at the moment that aircraft type choice is standing out very starkly as a key driver of emissions. And those airlines that probably for a cost efficiency in their own operations reasoning, but those airlines that have chosen those more fuel efficient aircraft obviously are now winning on the emissions side of things as well. But it is very stark, the difference between different aircraft.
Yeah, we'll look at some of that in a moment. So this example here with Google is where the data's valuable for the passenger making a choice, but there's other areas, aren't there, where this sort of data is required, more emissions data in the industry. So there's the passenger decision making, which we've touched on. Tell us a bit about what you mean by ESG reporting, carbon offsetting, and the fuel consumption operational efficiency.
So on ESG reporting, we've seen this very recently this week in the news from the UK government, looking to organisations to demonstrate their environmental and sustainability credentials when they're doing their financial reporting. And we are increasingly hearing of organisations who, in their own way, they want to report their sustainability, but from a financial point of view, they're having to report the sustainable investments that they're making in order to access a lot of the money that is in the financial industry now. As individuals are making pension choices and ticking that kind of box that says I want a sustainable pension, those funds are now locked into sustainable investments. So you have to be able to demonstrate that to access that money, you are investing sustainably. So it's becoming increasingly prevalent and important to both report your sustainability and to kind of be able to demonstrate it as well. With regards to carbon offsetting, this has been around for quite some time. I think there's been some press speculation or press coverage recently about how actually carbon offsetting is kind of not the solution. Really, this is going to pay money to make the problem go away, in some people's opinion. Ideally, we would use things like sustainable aviation fuel or other objectives or other methods to reduce the emissions in the first place, rather than continue to create the emissions, damage the planet, but then kind of pay to carbon offset. So that's been an interesting one, and there are and have been carbon offsetting models in the industry for a long time, calculating emissions, but not necessarily sort of the most accurate models. And lots of companies who want to invest to offset whilst they wait to be able to do something more sophisticated, are looking for a more accurate model to do that. And then lastly, on the sort of the fuel consumption, operational efficiency side of things, this is where the airlines themselves or the airports are looking to reduce their own emissions. So they need to understand them. And as I say, kind of a model which shows the emissions created during taxi stage, or being able to split a flight into climb, cruise and descent enables airports particularly to understand their responsibilities for emissions created for their departures and arrivals. So providing data that is useful and applicable to the industry to help them then manage their operations is that fourth use case that we've been looking at. And then there are many more that didn't quite make this list, but other people who've approached us about the emissions data.
It's sort of encouraging, despite the scale of the challenge, which I don't think anyone's in any doubt about, that there are lots of parties actually working to try and provide more data, to try and make better decisions, to try and move this whole area forward. So let's have a look at some of the data that you've, this is really a sneak preview, I guess, isn't it, of the data that you're beginning to get out of your models. We've got a selection here of 25 airlines. I think they're the top 5 in each region, so it's a slightly eclectic list. And on the one hand, we've got a height of the bar, that's total emissions, isn't it, for each airline for the month of November with the schedule as it is at the moment. And then the color, the shading that you've got for each of these bars is a relative CO2 per ASK, so per available seat kilometers. So that's quite, it's quite interesting, isn't it, Matt? We've got a couple of reds that stand out here. So these are the airlines operating much older aircraft, I take it.
That's right. Yeah. So you can see the JAWS bar is very red, and for those flights they have scheduled in November, those aircraft types are, expected to generate a higher percentage of emissions per ASK, as you discussed. But I think if you look wide left, Southwestern American, kind of similar volume of flights, but the total emissions from Southwest much higher, and that's because that darker shade there just showing that on a per flight basis or a per ASK basis, the emissions are higher from their aircraft. So we're still coming to grips with the data and what it's telling us and what we're learning. We've started at that, producing the emissions information at a per flight basis, and produced a kind of proof of color, I'm reading the title, proof of concept of that data set, so we can look back at 2019's data, or we can look ahead to the schedule over the coming months and apply those emissions calculations. But it's fascinating what's coming through and the things that we're learning as we go through.
And I can see the value if you can layer on the load factor as well, because I'm assuming that a Southwest aircraft probably has a higher load factor than American Airlines. So on a per passenger basis, the numbers might look slightly different again. But we're people who love data, and the more data points we have, the better the decision making is going to be. So this is a work in progress at the moment, isn't it? But definitely a step forward.
Absolutely, I think. Go on, John.
I was going to say, Becca, I think it's also, you need to look at this as a picture at a moment in time. So if you take JAL, for example, that part of the reason they are where they are is because they're using a relatively old wide body fleet for domestic flying. So it's short haul sectors and high carbon emissions. Once they get back to using those aircraft on longer haul international sectors, then you would expect that sort of shade of red to become more normalized as their network takes back a more conventional view.
Yeah, that's very, very true. They're just flying short haul sectors at the moment, aren't they? So you're right, as the length of flights gets longer, their efficiency will improve for sure. And Valerie has asked another question about, this is still going to be, though, for airlines, a trade-off between their business objectives and in this very difficult time being profitable with the fleet model that they have, and trying to achieve some of their longer term carbon impact sort of objectives. So it's not easy decisions, is it, for airlines? It's not as simple as saying we're going to change all our fleet. It's how we get from where we need to be.
It's horrible. You just think about it. You're an airline CEO. You're trying to satisfy shareholders who want to return, shareholders who might have, a very empathetic view towards carbon and the environment, etc., etc. And you're stuck between a rock and a hard place. Do you use your assets most effectively from a profitability perspective and take minimal account of the environmental impact, or do you flip the other way and compromise your profitability in some cases? It's a horrible dilemma that every airline is facing. And place an order now for a new aircraft that is state-of-the-art, environmentally friendly. It's still going to take 3 or 4 years before you'll see that in your fleet. So there is no quick wins to be had here.
Okay, so looking at the same data, we've picked out some pairs of airlines from that list we had just in the previous slide, and looked at their relative emissions for specific routes. So we have up in the top right here, we've got BA and Lufthansa, or Deutsche Lufthansa as they're named now, on Frankfurt Heathrow. We've got All Nippon and Japan Airlines on Sapporo to Haneda, and we've got Southwest, Delta and Spirit on Atlanta to Baltimore. So by color coding them in this way, these are the same sort of color phasing that we had in the previous chart. We can see which is emitting more, which has more emissions on those routes, and obviously that'll be more emissions because there's more flights, and then also which is a better emissions per ASK. So in this instance, Spirit doing rather better, in Japan, All Nippon doing better, and in this European market, Lufthansa doing a bit better. So quite interesting to, this is the sort of information that feeds into that Google model, I guess, that says this is the airline that's emitting less on this particular route.
That's right, and I think if you look at both the examples on the right, the airline there that's sort of got the higher bar, so generating the higher total amount of emissions, is because they're operating substantially more flights on the route than the other airlines. So they may be overall generating that bigger amount, but on a per ASK basis, they are producing less emissions. So in that respect, I suppose credit to them, and to the point we were discussing earlier on about airlines' choices on emissions. This is driving decisions around right-sizing aircraft as well. So KLM, I know, have a policy of right-sizing, and right up until the point of almost up to departure, if they can change the aircraft to a smaller aircraft based on their passenger forecast, they will do. But you've got to have a flexible fleet in order to be able to do that. And the cost of maintaining such a fleet, again, something you then have to balance. So it is a really challenging point for airlines to be driven by multiple different objectives. I guess just for completeness then on the left, you can see that Southwest not only the overall largest contributor of emissions on that route, but also that their flights are generating the most emissions per ASK.
Yep, we'll don't know what to say to that. I think we've come around to 9 o'clock. That's been really useful. So we'll draw the webinar to a close at this point. I think we've answered most of the questions that have come in through the course of the session. Thank you very much for joining us. Thank you, John and Matt, for all your insights today. Lots to think about there. Lots of positive sense of where the industry is going, and really good to see OAG's emissions data begin to materialise. We will be back next month. We haven't got a date yet, so look out for the emails from OAG, which will give you the date. But we will be back in another month with another webinar. So thank you very much for joining us today. John and Matt, thanks a lot. Bye then.
Thank you.
Thanks, everybody.
Bye.